Welcome everybody, my name is Krush AK and this is the Market Meditations podcast. We chat with fascinating people from around the world to extract mindsets, routines, stories and habits to help you build richer lives. Meditators, I'm extremely excited to bring to you today Altcoin Psycho. He's an anonymous Twitter trader that's very well respected in the space. He trades both the legacy and crypto markets, with his focus being primarily options. If you're interested in learning his options trading secrets, make sure you listen to the last 10 minutes where he reveals more than I ever thought he would. Before we jump into this episode, don't forget that I send hand-picked market news, insights, and education to over 6,000 traders and investors 3 times a week. To get access to this, all you have to do is sign up to karushak.substack.com. Meditators, welcome to another edition of the Market Meditations podcast. Today I have with me another popular personality from the crypto Twitter space, Altcoin Psycho. You can follow him on Twitter at Altcoin Psycho. He's got Christian Bale, that's his name, right? Christian Bale, looking super sleek from American Psycho, hence the name. Welcome, and thank you for joining me.
Thanks, Chris. It's great to be here.
Well, it's great to have you. And well, you've got American Psycho as the Twitter handle, which I absolutely love. And that character was very much obsessed with himself, success, and material things. Now, I don't think, judging from our pre-conversation, that that's you at all. But I know you do like cool material possessions. Like recently you made that awesome purchase. You actually showed us cashing out of $100,000, I believe, and then bought yourself a Jaguar F-Type. So firstly, congratulations. And secondly, I'd love to hear about what that means to you. What does money mean to you? And what does a material possession like that mean to you? Why do you like it?
Definitely. So first off, I appreciate the kind words. Before I jump into that, we could talk about the American Psycho character real quick.
Yeah, I'd love to hear about that.
Yeah, that's my favorite movie. I just think that the acting is so great, and Patrick Bateman is such a hilarious character. But to be honest, when I first made my Twitter account, the sole purpose of that account was to just troll once in a while and you know just share some thoughts with some friends and just kind of shit post. So I wanted a kind of a personality that fits that in terms of a non-personality, and I thought Patrick Bateman's a great fit for that. But I never thought that I was going to have a following one day. Had I known that, I probably would have not pigeonholed myself in such a dramatic character, because I think a lot of people assume that I'm some sort of psycho in real life. But
there's definitely an association between people's avatar personalities and their real ones. It's funny you say that you just picked it and it happened to blow up. Trader Main was telling me the exact same thing. I picked my robot goose and now I'm a robot goose.
I think Main is a perfect example of that. Main is actually a really great friend. We're doxed with each other in real life. We've hung out in real life and things like that. So shout out Main.
Nice. Big shout out to him. We had a great podcast episode, which I highly advise listeners check out.
So we can jump into the F-Type too. So that car, that car has been my just absolute dream car for, before they even released it, back when it was just a concept. I think it even had a different name back then. The funny thing is, I think a lot of people, they look at my Twitter and they assume that I'm very into materialistic things, and I definitely enjoy like nicer things, but ironically, I'm quite the opposite. I don't own a single pair of designer. I think really my only splurges are, the car and good interior design. I'm a total nut when it comes to like art and good furniture and things like that. So in that sense, maybe that is true to the Patrick Bateman persona. But so that car.
Wait, what sort of art do you like?
So my favorite artist is an artist called Fabio Lafauci. Highly recommend people looking him up. It's kind of like abstract modern art. I really like older artists like Fornasetti, more newer guys like Banksy, Cause, more like street art.
I know one of those names, Banksy. I definitely know who that is.
Yeah, being in London, yeah. And it's weird because it was just a more recent passion. I'm not like an artist or creative or anything like that. But with the F-Type, the reason I bought that car, I'm just a big car guy, but to me that car was more of it's kind of to me it's a trophy. It has a lot of sentimental value to me because it's the car that I wanted growing up. You know, my first car I purchased for like $2,500. I purchased it with like 140,000 miles. It was a total beater, and so to me, it's the car it's more of a trophy to myself, right? It's kind of like a trophy that any agreement or any promise that I make to myself, I can achieve. And I know that I can sound kind of corny or cliche, but when I sit in that thing, it always puts a smile on my face now because it just reminds me. It's like this is a reminder of the hard work, and in a lot of ways, it motivates you to keep going. You know.
I mean, that doesn't sound materialistic at all to me. In fact, I think it's materialistic or comes from a negative place when you make a purchase like that from insecurity, from a place of weakness where you're just trying to compensate by getting these possessions. But in your case, it sounds like that's almost like a statement to yourself, a true motivator and just a symbol that, hey, I can accomplish this. So how did it feel when you finally bought it?
It was surreal. It was crazy. You know, to be honest though, it didn't really hit until maybe a week or two after when it's weird. It's a weird feeling, and maybe others listening can relate to this that they purchased their dream car. It doesn't hit you right away, and in fact, I don't want to say you get a sense of buyer's remorse, but it's just like shit. Like I just dropped a lot of money on this thing, and you're expecting it to make you feel some kind of way. And to be completely honest, it was an amazing feeling. But if anything, what it did is it kind of further proved to me the notion that, you know, materialistic things are nice, but they're not going to fill any sort of gap or any sort of void you have. You know, if you've got a void inside of you, it's not going to be filled with purchases, even ones that you've wanted your whole life. So that was kind of an interesting, unexpected thought that I have. But like I said, when it comes to material items, I don't own any nice watches. I don't own any designer. You know, like I like nice clothing and I'll spend good money on clothing, but not like your brand names. I just prefer, you know, like Oro Los Angeles is like one of my favorite brands, or like Cuts clothing. It's just more lesser known brands that just have good quality clothes. To me, it's more about the looks and functionality rather than the design name. So yeah, the car is really the biggest splurge I've made outside of like my artwork and stuff like that.
Well, then, yeah, really not staying true to your Altcoin Psycho personality, are you? This naturally transitions into why trading then? Because it's such a money-focused art or skill, if you will. If you have no desire for many materialistic things, what does the money mean to you, and why did you gravitate towards trading?
Definitely. So two things on that. One, I mean, I just grew up in that environment. My father was a full-time options trader for 30 plus years.
Oh, wow.
So I definitely had a lot of help kind of learning from him. But in terms of why I'm so money driven, because I don't want to make it seem like I'm not money driven. I mean, I work incredibly long weeks, trade all I can. I'm very, very money driven. But for me, the money isn't to purchase, crazy mansions or anything like that. It's more about the freedom it can bring. Because I didn't grow up with money. My parents were immigrants. I don't want to say I was poor or have like your typical like rags to riches story, but I didn't grow up with money. And even right now, my parents don't have a lot, but thankfully I'm in a place where I can financially help them out now. But I just see that money dictates your life, whether you want to admit it or not, whether people love or hate money. Money does control our lives, so I would rather have control over it, and use that to travel the world and make great memories, eat at great restaurants. That's kind of more of what I'm after.
Yeah, I mean, money doesn't matter is a bit of a stupid statement. Of course it matters. It's how you get anything in life. It's not the single determinant of happiness. It does not result in happiness, but it enables freedom, which can, if you choose the right path, end up in happiness. Now, I don't know if you're comfortable talking about this, but if your father was an options trader, naturally one would assume that's a decent earning and not one which would be hard to grow up with. Is that something he learned later in life? Is that something you're comfortable talking about?
Yeah, so when I say options trader, by all means I don't mean like institutional trader or anything like that. This is just, you know, I'm sure he probably lost an absurd. He's never to this day showed me his P&L, so I can't imagine it's that pretty. Otherwise, knowing him, he would have definitely showed me. So I have no idea, truthfully, like if he was good or not. I think there's a lot of things I like about his style that I've absorbed, but there's a lot of things I don't like and I disagree with him on. But he was doing all right. I know when he first came here, he started a small travel agency with my mom. They came here together, and it was like your typical, mom and pop small business, right? And after some time, he got into trading. I don't really know when, and it seemed like he was doing well. And then 2008 pretty much wiped him clean.
Oh
Um,
no.
yeah, and there were really two things that wiped my family clean. One was 9/11 because of the travel agency, and the other was the 2008 market crash. And so both of those things, I just think that my parents just didn't have the best understanding of money or diversification or risk management. So to this day, they're still feeling that pain, from those times. Um, but the byproduct of having that experience from my dad is there's definitely a lot I've learned about macro markets, market rotations. Um, the kind of the happy medium that we have is he's really great at kind of predicting what sector rotations are going to be happening based off political events. He got his master's degree in political science, and so he has a really great understanding of just kind of macro. And then I take his kind of analysis and I figure out, okay, based off this, what stocks look good, what option order flows look good, what charts do I like, and so it's kind of a cool partnership.
AP, do you guys trade together?
Uh, we trade together in the sense that we'll consult one another. I mean, he doesn't have the disposable income to trade, so he'll converse with me on my portfolio. So in a sense, yes. In a other sense, no.
That's an incredible dynamic you guys have. Two questions naturally come up for me. Number one, if you'd seen your parents struggle and get hit so hard by these global events, now with the travel agency, that was just terrible luck. Although it's happened again with COVID, I'm sure a lot of travel agencies have taken heavy hits.
Absolutely.
But with trading, it happens a lot more frequently and it doesn't even need a big world event. So, knowing how risky it is, what made you still go into it? And then I'll follow up with another question after that.
That's a great question. I think I have selective hearing when it comes to hearing his horror stories, and I tend to gravitate towards the days where he tells me he'd turn, you know, a couple $1,000s into six-figure trades off a single trade, just buying like super out the money calls or something like that, and then ignoring the stories of how he lost much more than that, or he didn't sell soon enough and watch six-figure gains turn negative or things like that. Not to throw him under the bus, but I think I don't think he has great risk management, and so I think that's why I've tried to become as good as I can about risk management. So you kind of learn from your parents' mistakes.
I mean, that's incredible. So, by all standards, he probably was, given how you're still working with him, a fantastic technical analyst who could make very accurate positions. But that missing factor of risk management just makes a world of difference, especially if you're trying to be a career trader, because you'll be fine for 1 year, 2 years, 3 years. But like over a long career, if you don't have tight risk management and beyond just using a stop loss, you need to understand your risk of ruin. You need to know how much of a drawdown you can take and how likely you are based on your past data to experience that sort of drawdown. And you also need an exit plan as well. Like no one can really trade forever, at least not in a way where you're trying to exponentially grow. Like you can always gravitate towards flat risk. Are you planning on trading for, like, is this the career path for you?
I don't know, to be honest. And I think with my father, I think you nailed it on the head. I think he's a good analyst. I don't think he's a good trader, and I think we see that a lot too. And usually that missing variable that determines whether you're a good analyst or whether you're actually a good trader is risk management, and it's also control over emotions and trader psychology. But in terms of do I plan on trading forever? I say no right now. Knowing myself, that's probably not true. I will always have skin in the game just because I do strongly believe that I have historically strong performance in the markets. And so I think it would be unwise for me to ignore that edge and put it towards other investments like real estate and angel investing, which I'm for sure I want to do as well in the future. But I'll for sure always have money in the markets, whether I'm going to be sitting in front of my screen for hours on end, trading options, or maybe it's just more macro swing trading and investing. It's probably going to be the latter as I get older. But I think for at least the next 10 years, I'll be grinding it out and shit posting on crypto Twitter.
Well, I also, no matter what happens to trading, will always be shit posting on crypto Twitter because that is really, really fun. We've started in a really funny way. We started with like, where do you want to end with the trading? And now I'm going to take it all the way back to the start, which probably was childhood for you. How did you learn to trade? I'm sure your dad wasn't your only mentor on your journey.
Yeah, so I learned a lot from him. I've been trading for a pretty long time now, and he was definitely the biggest influence. So yeah, I've been trading since 2013. I was always equities. I didn't get into crypto until 2016 is when I first really started hearing about it and looking into it. And then 2017, I was more actively trading it. I think in terms of, there's not a lot of huge influences on my trading style. I think there's just a lot of amazing traders that I've learned from and absorbed from over time. But the one person that I always give credit to is Hornhairs, because if it weren't for him, I would not be on crypto Twitter, or I probably would have been on crypto Twitter much later. But Hornhairs, I used to message with him on my like doxed, just my quote unquote normie Twitter account. And I didn't know a lot about crypto. And he was one of the accounts I followed that seemed to know a lot. So I would always ask him a lot of questions about cryptocurrencies and how trading crypto compares to trading, more traditional legacy markets and things like that. And he was a phenomenal mentor, not only in that aspect, but he encouraged me to create a non-Twitter account, and immediately would help me kind of build my following a little bit, because he had a decent following at the time. I think he had like 20,000 followers at that time. And so, he would retweet my charts when I'd post something that he'd like. And that just, inevitably kind of got my foot in the door with some of the other bigger accounts. Crypto Dog was another early person that I made friends with, and he really helped my account grow. So yeah, in terms of trading styles, that one's a harder one to answer, but, from a more, from a perspective of getting my foot in the door with actually trading cryptocurrencies, Hornhairs was a big influence to me. Crypto Dog has played a big role too.
I mean, I am a huge fan of Crypto Dog. I haven't met Hornhairs properly yet. We follow each other, but I haven't had the pleasure of talking to him. He's definitely a guest I want to get on the podcast at some point. What's interesting to me is these are definitely Twitter mentors, from the sounds of it, a little bit more than trading mentors. Specifically, how did Hornhairs, help you transition from the stock or legacy markets over to crypto trading?
Well, I think frankly, when I first started trading crypto, I had no clue what I was doing. It's such a different beast. It's such a different game. You cannot, and you see it all the time. You see FX traders come in and get wiped trying to trade crypto. Same with traditional market traders. I think Hornhairs really helped me learn the nuances of trading crypto. And so I don't know if I would have been as profitable as I was in 2017 if it wasn't for him.
What are the nuances of trading crypto?
I think things happen for no freaking reason, and it sounds crazy, but like my best crypto trades have been the ones where I kind of dumb myself down and I don't try and overthink things because I that kind of works well in legacies, right? Like you do your fundamental research. I think that was the big thing that I learned is like fundamentals. Sometimes they impact. You know, now that the market's maturing a little bit, it's a little bit more impactful. But back in 2017, I mean, all it took was a white paper, which is crazy in hindsight to think about. Like these companies raising, $1 billion market caps off a PDF, off a 20-page PDF. That's it.
An idea of nothing but an idea, and that just shows how immature the market is. AP, I don't know if you've built a business before, but it's purely execution. Your idea isn't worth squat. It's entirely how well, like all the factors are to do with culture, project management, the team, the leadership, the dynamics, the ability to follow through, the diligence, the perfectionism. Like every trait I've mentioned is far, far more important than the actual idea.
Absolutely, yeah. And so I actually do. I do have my own business. I have a tech company. A lot of people don't know that. My background is in tech. Even before I got into trading and crypto and things like that, tech has always been kind of my main thing. Uh, in like quote unquote in real life, most people know me as
IRL.
they know me as like a tech person, not as a algo trader or an options trader, things like that. To be honest, it's just more people that are closer with me know that side of me. I tend to, or I try to disassociate my real brand with that as much as I can, even though I'm starting to think with everything going on, it's probably smart to not do that anymore. But it's just, I hate like the typical like Wall Street bets, crypto trading, a guru. Like, if you tell someone, oh, like you're a trader or anything like that, like it just gives off the worst impression, So I've for a long time tried to avoid associating myself with that in real life and just kind of stuck with, the tech entrepreneur. Um, but I'm definitely starting to see the two worlds collide a little bit as I get more involved in algorithmic trading, and now I'm talking with a couple hedge funds about licensing some algorithms to them, and so it's becoming very real. It's no longer just shit posting on Twitter and trading. Now it's like trading takes up a good chunk of my week. It's responsible for a good chunk of my income, and so as we see the markets mature, I'm sure my real life brand and my Twitter brand will kind of mesh a bit.
Well, two awesome points which I want to expand on. I made a note of both. Let's start with something you mentioned very slyly, selling your algos to hedge funds. Now, I have a lot of questions there. My first one is, how do you prove your algo can trade with the required size that a hedge fund needs, given, and I may be presumptuous here, but you're not trading the amount a hedge fund would be trading?
Definitely. So I think every fund is different. And when I use the word hedge fund, I just want the listeners to know this is not like your well established, like Wall Street, Main Street hedge funds. These are individuals that they have a high net worth and they got their Series 65 and what other licenses they need, and or they know a couple rich people and they started a fund, or maybe they have a background in algorithmic trading. There's a lot of quote unquote hedge funds that you wouldn't think are true hedge funds. So I'll start with that. But it really just comes down to, there's a couple factors they look at. The first main thing they look at is what time frame does this algorithm trade on? Because if it's a high frequency scalper that trades on the 15-minute and the profit margins are 0.5% each time, right there that thing's not going to be able to handle much volume, because slippage is going to eat away at the profits. But I think I've had several hedge funds kind of cold DM me, or like partners of hedge funds cold DM me on Twitter, and just kind of interested in learning more about the algo, because it's a 12-hour swing bot, right, and it doesn't produce a ton of signals. So naturally, a fund will think, okay, well this is a good fit if it's reliant off 20-30% moves rather than like 1 or 2% moves.
Mm-hmm.
and then when you start kind of exploring conversations more with that, obviously there's a whole host of metrics they want to see. They want to know the drawdown. They want to know, the Kelly, or also known as the Sharpe ratio. There's just a lot of things they look at, and frankly, the existing algo that I have right now is, in my opinion, not suited for funds. There are still some funds that they claim they have a high risk tolerance and they're still interested in it. But I mean, my algo is not designed to have low drawdown. It's designed to be a high profit bot, as kind of a hedge in someone's strategy that they have a more conservative style. So that's, I think, like the perfect fit for someone. The bot is the perfect fit for someone that they're more of a somewhat of a conservative trader, and they want to hedge that strategy with something that's a bit high risk, but they feel like they don't have the emotional control to do so. So yeah, there's a lot of things that funds look at when it comes to algorithms. I think a lot of people think that you have to have some crazy high frequency machine learning, algos for a fund to be interested in it. But even if you can say, hey, like I have something that, it can produce less than 10% drawdown a year and give you 30%, 40% returns, like that's enough to get a conversation going.
Well, AP, I've got a lot of follow-up questions. So a quick fire one. Can you tell us how many variables go into your bot?
Yes, there's several. So the main thing is my bot's essentially a momentum breakout trading bot, which is a good and a bad thing depending on what market it's in. If the market's flat, it's going to get killed because there's a lot of false breakouts that just turn to wicks, or there's no breakouts at all, right? So my bot thrives off volatility. It doesn't matter if the market's going up or down. I'm happiest when the market's trending because that means my members are the most profitable. So it looks at volatility, and then it looks at trend on a high time frame and at a low time frame for double confirmation. Probably the most I can go into it without giving too much. One thing I will say is that I am also I'm trying to find a way to incorporate mean reversion, because mean reversion is something that I've adopted into my own trading recently, and I love it. But really how I made the bot is I used to have a pretty systematic approach to trading. Now I'm a much more discretionary trader, but I really just wanted a way to automate my trading style because there's two things. One, it's just a pain to always be watching the market, especially in a market that never sleeps like crypto. And the second thing is it's really hard to perfect your trading psychology, to have emotional control, especially when there's a lot of volatility, and that's when the bot is most profitable. So to me, it made a lot of sense to automate my trading strategy because I thought, hey, I know that, in a bull market, if you really want to make good money in a bull market, you need to long resistance. And if you want to make a lot of money in a bear market, you need a short support. And I think that's probably going to trigger a lot of people hearing this because it goes against like your typical risk management advice, right? Like buy support, sell resistance, vice versa. But like I said, this is the point of at least my trading bot was to create something that's a little higher risk and appetite and trade in a way that I sometimes feel uncomfortable doing on my own. And when I pair that with my own trading strategy, it ends up being a really great harmony.
Well, I'd start by commenting, I think any generic TA advice anyone gives is nonsense. It means you fundamentally don't understand how trading works. I mean, support and resistance as concepts, you can trade them however the hell you want. As long as you have data to back up what you're doing works, there are no arbitrary rules. There are guidelines that could suggest certain things, but if anything, if everyone thinks one thing, you want to do a different thing because there might be an edge there. Now, AP, you need to stop giving me such detailed answers that give me so many different points I want to expand upon. I'll stay on algos before going on to another few awesome things you mentioned. Given you come across as a very knowledgeable trader, seem to have a very realistic approach to the market, I want to have you answer this concern I've had for a while with regards to bots. So my logic is, if I have a really good bot, number one, I want to trade it myself. So that's the first thing I want to do with it. Then, if I've already got better bots and I've made a new bot that's not as good as those, and I don't want to take on any more risk and I don't want to trade it myself, then the next best thing for me to do is set up some sort of fund running this bot if it is profitable and is going to stay profitable. I don't understand what my motive will be to sell this bot.
Definitely. I actually get this question so many times. My favorite go-to answer is, why not both?
Well, my response to that would be, if I have found a very good inefficiency in the market, the more size, the more money is trying to exploit this inefficiency, the less the inefficiency exists, and the more likely it is to be picked up by others and therefore no longer exist.
Absolutely. So I'm personally not a fan of, there's like a lot of people that like on Twitter, they'll be like really overly cautious about quote unquote leaking alpha and things like that. The way I see it is there really are no secrets to the market. Anyone that claims that they've discovered something novel is full of shit, or they're just fooling themselves. I think it depends on the bot. So I have a good friend. His name's 9K. He's got a scout bot. His bot is a 15-minute bot. It's a really great bot. But he can only have, up to like 50 or so people use it, because then that really does become an issue. But my bot is a swing trade bot. It's a high time frame bot, and it's based off the 12-hour plus chart. It would take an insane amount of people using my bot for it to ever become a concern that it's going to eat into the profits or it's going to become inefficient. And even if it did become inefficient, the curve at which it would be incredibly flat. So I'm looking at on Stacked. That's where my bot is hosted. Every trade the bot has ever taken connected to Stacked is verified through the API. So these are all live trades using real money. The bot has performed about 700% in its lifetime since beginning of 2019, or 8x return on your investment, right? And say that it actually did reach the point where there was some slippage issues, or there's too many people using it. That 800% return, or that 8x return, might turn into 7.5x return, right? And that's still wildly outperforming a buy and hold. And I think that's the ultimate goal. To me, if an algo can outperform a buy and hold, then it's worth looking into.
We want alpha, so we definitely want to outperform whatever index we set. And if buy and hold is that inset index, absolutely. My response would be, so firstly, congratulations. Those are some insane returns from 2019. But a user of the bot coming in now doesn't benefit from those 800%. They only care about the future performance. And is 1 year enough to extrapolate that much further ahead, especially in such a volatile, developing market where it varies wildly from year to year in terms of the sample size of participants within the market?
Absolutely. I think so, especially because we're seeing volatility come back. And as I mentioned before, it doesn't matter if we're going to be in a bull market or in a bear market. The time to use, and not just my algo, but most algos, is when markets are trending. Just in the last 30 days, the bot has returned a 2x return, and it's had a 100% win rate. So it really, to me, it does depend on when people come in, because there will be members that have joined when the market was totally flat and they walked away probably down on their accounts, because the bot is going to chop itself up, right? But when volatility starts to come back and when we start to see markets trending again, that's even when, with my own trading, I'll add more money to my bot, or I'll increase the leverage on it a little bit, or up the risk a bit. Because the beautiful thing with and this bot is tuned specifically to Bitcoin, and the beautiful thing is usually what we see this kind of pendulum with Bitcoin, where when we start really going on these volatility backed retail runs, it always slingshots back. So not only are you going to make money on the way up, but when the rug gets pulled, you're going to make money on the way down. And the way that at least my bot is designed is that it's always in a trade. It's meant to take multiple small losses, but then 100% of the time it will catch the bigger move. So if you go and look at all the trades my bot has made, it has never once missed a move over 10%. And that's just because of the way I've designed it, where it's always in a trade and it's meant to capture those larger moves that offset the losses produced by getting chopped around a little bit. But to your point, if the market is flat for 12 months, my bot is going to get absolutely destroyed. And that's where you're much better off using someone else's bot that is more geared towards lower time frame scalping. That's when those bots really shine. So I think for me, my own long-term goal is to have my algorithm behave in a way where it works off one logic when certain market conditions are identified, when the markets are flatter, and then switch to a more trend following logic when markets are clearly trending.
It sounds like trend identification is the key component to successfully using the bot. If you can identify when it's going to be a bull market or when it's going to be bearish, and you're not going to get periods of consolidation, then fantastic. And I love that you do have clear, thought out answers to the common concerns which come up with bots, and that is in the crypto market, often small sample sizes of data, and sometimes it brings the question why it's being sold. I see your point that you are setting a much higher time frame chart, so alpha decay potentially becomes less of an issue. So it does make sense compared to a 15-minute scalp bot. You mentioned something really interesting, which as an algo trader kind of reminds me of my own trading, because while I didn't use algos, I may as well have, given how robotic I was in the markets for my first 2 to 3 years of trading. I would set up rules, and besides using discretion to find support and resistance, everything else was like clockwork. I had a checklist like a pilot. I'd tick off every condition. Once it was filled in, I enter a position, I go for an exit. And as I've gained experience, as I've gotten better, as I've spent more and more time shit posting on Twitter, staying in tune with all the ebbs and flows of the market, discretion has become more and more powerful. How has your journey been transitioning from a more systematic trader to a more discretionary trader? And for our listeners that don't know what we mean by discretion, and that simply means the opposite of a checklist. We're using intuition, our feel for the market, and subconscious pattern recognition, which has been developed over years of trading.
Absolutely. Yeah, I think for one, I can say that I've definitely evolved from a trading system to a more discretionary based approach. I think flat markets will do that to you. And I don't even necessarily, I'm not even saying that a discretionary approach is better than there's no such thing as a better strategy, right? It's what works for you. But I think a lot of people naturally tend to go from a systematic trading style to discretionary one when markets are either flat or when we're in a bear market, because a lot of people's systematic styles are built in bull markets, and you really can't test a trading strategy until you've tested it in all three environments. The three environments being a bull market, a bear market, and a flat market. And I think naturally, and this happened with myself too, a lot of holes are poked into your trading style or your trading system when opposite conditions are presented than the ones that you originally built that system in. And so I think my discretionary style was more of a byproduct of kind of the frustration that came with thinking that, what I thought was a pretty solid strategy doesn't necessarily stand the test of time in markets. Great example that can be reflected in my algo, because again, my trading algo, my bot, the Psycho bot, is a lot of ways a reflection of the systematic trading style that I had. And it doesn't do well in flat markets. And it's the same way with me. I don't trade well in flat markets. There's some traders that they are excellent scalpers. I'm not a good scalper. I try not to scalp unless I have very high certainty. But some traders, I think Salsa is like a really great example of this. Jules, he's a phenomenal scalper. I don't know if he's discretionary or systematic. I think he's more discretionary, but I don't want to speak up for his style. But
we've had him on the podcast, and he does seem to be a combination of both. He has a lot of data for everywhere from win rates of certain system of his to times of day which he trades best versus when the market does what. So he uses a lot of discretion, but he's got a lot of data behind his decisions as well. At least if what he said on the podcast holds true.
Yeah, that's awesome. So I think to that point, like traders like him or another that comes to mind, like Trader XZ or XO, those guys are really great range traders. When assets are trading in a range, they do well. Again, I tend to just stay flat when markets are flat. And so I think a lot of the choppiness that we've had in crypto help define the discretionary style that I have today.
AP, it's really interesting how you've transitioned from the systematic style to the discretionary style, because a lot of traders do it simply because they gain experience and they feel their opinion carries more weight, whereas yours is done out of a necessity of what styles you're most suited for, and that is the trending markets. Now, one thing I love to do is, as we transition from a ranging condition to a trending condition, or rather trending to ranging, is in a ranging condition, if you zoom out far enough, especially in crypto, you can often find trends. So one thing I like to do is, instead of doing lower time frame trading, zoom out and do the higher time frame trading when we are in these more ranging conditions, and try find trends in that sense, rather than trying to trade the lower time frames as if we're in a trending market.
Absolutely. Yeah. And I think for me, it's kind of the same way, but I look for confirmation, whether it's a downtrend coming towards a market reversal or a flat market starting to do a run up. I like to look for trend confirmation. One of my favorite tools to do that's the Guppy. A lot of people have seen it. It's my pinned tweet, but
Okay.
I made my Bitcoin bottom call at 5K back in 2019 because at least for Bitcoin, the Guppy is really reliable when it comes to calling the macro trend. There were only 2 fake out green flips in Bitcoin's history. Given the fact that we just got done with such a large retrace on it, I felt comfortable, attempting to call the bottom there at 5K, and that's where I really loaded up on spot, and I'm still holding that spot today. And so for me,
AP, could you explain the Guppy a bit for our listeners?
Sure. It's essentially just a band of a lot of moving averages. So if people are a fan of the 50 and 200 flip, or the 20 50 100 or 20 50 200, there's so many different crazy combinations. The Guppy is nice because it takes a look at pretty much all of the relevant moving average numbers that people like, and it just looks for confirmation. So it flips green when all of the major moving averages are bullish, and it flips red when they go red. So it's of course a lagging indicator, right? Like the true bottom was something like 3K, but to call bottom at 5K,
it's not bad at all.
Still not bad. So I'm a big fan of Guppy. It's I'm not too much of an indicators guy. I actually made a tweet about this recently. I think most indicators fail to show you the characteristic of the move. A great example that I gave on Twitter was a lot of traders are a fan of momentum breakout indicators. If you have a blow off top, that would theoretically look like a bullish signal on a lot of momentum breakout indicators, right? Because we have this explosive breakup, but it misses the characteristic of the move. A blow off top is obviously very bearish. So I think the advice I always give traders is to really get good at naked charting, learning price action, understanding supply and demand zones, and
that's the key point, AP. It's that understanding, because you can use all these indicators are doing is translating price data into some other visual representation. And if you don't understand what that price data means, when something happens, like what you said, a blow off top, you're not going to understand the implications, and that indicator is going to be useless. That's why, like, I've got some free education online. I don't know if you've ever seen it, but when I teach about moving averages, I'm not telling you this is a line. When it fans out, it's an uptrend. I'm telling you this is a line that represents the average of the past X closes. The longer it is, the bigger the sample size, the less it moves. And I explain to you the intricacies of what goes on within it, what that data means. And now it's no longer just a line on your chart. It's a line, and you understand the mathematics behind what goes into it.
Absolutely. Yeah. And that's the right way to do it. Another great example, I think the most common indicator that we see on Twitter is probably RSI, right? If you're an RSI trader, you would have missed pretty much the entire bull run on Bitcoin, the 25K run, even more advanced strategies, even ones that I really like to use, like mean reversion. Almost that entire run-up was a reversion of the mean if you apply any mean reversion strategy. So that's where those indicators fail, is on truly parabolic runs up or really sharp run downs. That's where it's important to understand. I think your best friend is, like I said, understanding the characteristics of the move, getting good at naked charting, and being a level to level trader rather than trying to predict the future. What's something that's really funny to me, I often see people get kind of attacked on Twitter for flip-flopping biases, and then a lot of people will be like, oh, like you're always flip-flopping. Not to me specifically, but I see it with more of like your scalper traders. Like I see it with Jules a lot. People are a lot of times in his replies like, oh, like 1 minute you're bearish, 1 minute you're bullish. But what people don't realize is the best traders are like that. That in its sense is a talent, and that's why he has won the trading competitions that he's done. But that in itself is a talent, to be able to completely have such a liquid bias, such a fluid bias, that on a minute notice you can switch from bullish to bearish back to bullish, because that shows that you are truly trading level to level, that you are not succumbing to some bias that you have in the markets. And those are the traders that people should be the most afraid of when it comes to counter trading. Not necessarily the ones that they make these crazy predictions, they double down, they triple down on them, like the high time frame crystal ball traders. They draw
a million lines on their charts and show you all the different possibilities of where the price could go, which basically says up, down, or sideways.
Yeah, the only exception to this is Kaleo. He's a good friend, but he's awesome at that. I don't know how he does it, but 99% of the time when I see someone that attempts to make 6 to 12 month predictions, it's just to get clout. They're just trying to get clout, and that's not how the best traders operate. The most profitable traders are very much so level to level.
110% agree. And it's not just Twitter. Outside of Twitter, all sorts of famous like people who are working for the biggest banks in the world, sometimes they just make absurd predictions way into the future about what the market is going to do. Like we've seen predictions for Bitcoin go anywhere from 30K to a million from like really respectable big corporations, heads of divisions at banks. The other day it was Citibank. They were saying Bitcoin's going to 300K in 2021. And I'm just sitting back thinking like, where is that number coming from? And well, the reasoning was gold data from 1970s, because 2010-11 Bitcoin was similar to that. It's outrageous. And it is for clout within and out of Twitter. And to double down on your point about flip-flopping bias, I remember once we had our short-term top at it was about 12,500, and that was in August. My bias, once we had that dip and we started going sideways, I said, guys, I'm no longer as bullish as I was when we were going up in a straight parabolic line. I'm now more neutral. And people are like, well, why are you neutral? Why aren't you still bullish? We've just, it doesn't make, they don't understand that biases can shift. And that's because they're looking for predictions. They don't want education. They either want their biases confirmed that the price is going up, or they want some sort of prediction that's going to make you look like an oracle.
Absolutely. I think we're all guilty of that with crypto Twitter. It can really turn into an echo chamber where, we're always just looking for tweets that reaffirm our own bias in the markets.
Yeah, absolutely. AP, I think this might be the longest we've spent talking about trading in isolation on any podcast so far. No regrets, though. It's been a fascinating convo. I want to move on now to investing because you've obviously earned quite a bit of money. How have you invested this? Have you diversified out of crypto, or is it just building your net worth of Jaguar F-types?
So I haven't yet. I am really wanting to get into real estate earlier. Before I actually purchased the car, I was looking into some real estate here. But to be honest, in most cases, with the exception of like a couple markets, real estate really doesn't make a lot of sense right now, even though rates are so low. Just I should clarify. If you plan on buying a house to live in it, I still don't think it's a bad idea. But from an investment perspective, if you want to buy a house just for the purpose of renting it out, I personally don't think right now is the best time. But a huge asterisk here. I'm a complete novice when it comes to any kind of real estate investing. I'm just getting my feet wet in it. People that I trust and know more than me in this subject have pretty much all told me the same thing, that now is not the right time, so it's better to just wait. So I'm waiting. But when it comes to diversifying my income, two things that I think I will be doing a lot more next year are angel investing in startups, and then also real estate, because by next year I'll have my accreditation, so I can be an actual angel investor. So I haven't really diversified yet. The biggest form of diversification I have right now from trading crypto is actually just trading equities. And ironically, this is the most profitable year I've ever had trading, and the bulk of that has actually come from trading options in legacy markets, not from trading crypto.
Well, that's not hugely surprising given the amount of volatility you guys have had from all the global situation of 2020. It's been absolutely insane. You said something pretty interesting there, AP, which I don't know if you want to expand upon. You said you do not think it's a bad idea if you want to own the house, but not a good idea if you want to rent it out. And that's very much controversial. I wouldn't say it's the common wisdom. What would your reasoning be for that?
Sure. So interest rates are obviously really, really low right now. So from a lending perspective, I don't want to call it free money, but it's probably the closest we'll ever get to free money. I think it makes sense for people that are in markets where the rent prices have they haven't followed the same kind of correlation with mortgage prices. And so like if you're someone that a mortgage is going to be, and there's some markets where mortgage might be a little bit cheaper than renting, right? Like in my market, that's not the case. So from an investment perspective, it doesn't really make sense because I wouldn't really have any kind of profit margin there, right? But I think if you're in a market where the mortgage prices and the rent prices aren't too different, or the mortgages are lower, then yeah, you should. It's a good idea to do it if you're planning on living there, because A, obviously you're building equity. B, it's as close to free money as we'll ever get, especially if you get what's called like an FHA loan, which is like a first-time home buyer loan. Now, I'm not recommending that because some people say that then you have to pay mortgage insurance, and again, I can't go too deep into it because again, I consider myself a total rookie when it comes to real estate investing. But yeah, just at least for me, for my own risk tolerance, I would like to wait until hopefully, and it sounds weird saying hopefully, it's a bit cynical, but from an investment perspective, hopefully we can get some cheaper real estate prices.
Well, your reasoning does make sense, and I happen to have quite a lot of experience in the industry. So if you want to chat after the podcast, we can totally dive deep into details.
Absolutely. Yeah, I would love to.
AP, angel investing. What draws you to that, and what are your plans there?
It's funny because most experienced angels will tell you not to get into angel investing because the returns are not good. Most the profitable and skilled traders will oftentimes have a better return than angel investors. In fact, angel investing is actually historically one of the lowest performing forms of investing. Uh, Two reasons though I'm still drawn to it. One, given that I do have a background in tech, um, I love the idea of investing in something, and I would plan on being a really hands-on investor. So I love the idea of being able to invest in something and through a little bit of hard work, helping that investment grow, right? If I'm bullish on some company or some crypto and I throw money at it, there's really nothing I can do to really affect that. But with angel investing, I don't necessarily view that to be the same case, especially if I'm investing in things where I could add a lot of value to. Say I'm investing in a company that has a B2C consumer product in this space, right? I have a pretty large following with a really awesome engaged audience, and so that's something where I could add pretty immediate value to, right?
That's a big shift. That's a big shift that's been happening recently with when people are looking for investment, when they're bringing strategic partners in, that's what they're looking for, strategic partners. They're no longer looking for money. They want people that can bring other assets in. And one of the
Absolutely.
biggest assets is attention.
Absolutely. Yeah, 100%. And so when I do start angel investing, I'm only going to invest in things where I believe that, I could really make a difference in. I think the one exception to that is, uh, I think what differentiates a profitable angel from a non-profitable angel, at least from what I've seen and just speaking to people that know a lot more than me on the topic, is access to deal flow. If you're just,
Yeah.
you're just your typical angel with a lot of money, it's going to be hard. But if you're well connected to some good funds or some good VC firms and you have connections that they'll let you invest alongside them, then it could be a really good opportunity. And I'm thankful to have built a really awesome network through my Twitter account and just through my involvement in different tech projects. I've met some cool people that they've offered to when the time is right for me to invest alongside them in some projects, and they certainly have access to some cool deals. So I would like to take advantage of that. Whether it's going to be profitable or not, I have no idea, but I think it would be cool to at least just give it a shot.
Given built a tech company as well, it does make sense as a natural transition. And again, you've got the asset as well now of the attention you command. You've got a great reputation in the space, which is more than most can say in such a shady space that we do love, though. AP, last one. I know you're an avid reader. For our listeners, what books would you recommend? What books have impacted your life most?
It's a good question. So this is going to sound crazy. I think the book that has impacted me the most is a book called Money and the Law of Attraction. And I'm going to actually Google this real quick so I don't mess up the author and people buy the wrong book. It's by Esther Hicks. And I want to put a total disclaimer out there. I am not like your spiritual big believer in, manifestation, law of attraction. Like that stuff has always kind of been a bit of a turn off to me just because I'm a very, like data based, like I'm the kind of guy where like, I need to see it to believe it. Like I like looking at data. I like looking at facts. I'm less appealed to, like the mysteries of the universe and things like that we can't see. But my mom is the total opposite. And for the longest time, she would try to get me to read this book. And just, she'd always say, oh, you have like the wrong mindset. Like, you need to look into this stuff. And, I'd always kind of just dismiss it. And I mentioned earlier, like, I don't come from money. And there was a time, I think it was about 2-3 years ago, my parents were actually going through divorce. And that's when financial hardship kind of doubled because you can no longer combine the income of your parents, right? So they now have to double the expenses. And that was before I was making really good income too. So there wasn't a whole lot I could do because I was already covering a lot of my own expenses. And I remember she was days away from like pretty much defaulting on her rent payment. She was already like super behind on it, and I was getting so frustrated with her because it didn't seem like she was taking it seriously, because she would just say, oh, like, the universe is going to work its way out for me. Like, I'm not worried. And it would make me so mad. And I was like, Mom, you're delusional. Like, we need to figure something out. You're like a week away from losing this place. And like, I don't know where you're going to stay because I have like a 1-bedroom,
Yeah.
And I will never forget, like, she was so confident that things will be okay, even though she had like all these bills due. And then like, of course, like literally the next day, one of her longest clients of her travel agency that has been with her for like 20 years sent her a check for, it was like $15,000.
Wow.
And just said, hey, like, you've been so amazing for me and my family. And this was like an exec who, he's like always traveling private or first class, and my mom was a very close agent to them. So even if they were traveling, overseas, she'd be up at 3 a.m. working with them if they were stuck at the airports or things like that. And they wrote her a check, and they're like, you've been amazing to us. You've been a blessing in our lives. So, here's just a little thank you for the, 20 years of work you've done with us. And at that moment, I was like, okay, maybe, like, who am I to say that there's things in this world that we don't understand, right? So she told me, she's like, read this book. And I was like, okay, I will. And I read it, and a lot of it still to this day is kind of like hibby-jibby gypsy bullshit to me. But I think there are some things in there that it changed the way I think from a day-to-day basis. Can I definitively say it's what helped me get into a place of fortune now? I don't know, but I can no longer prove that it's not that. So I think anyone, whether you're a believer in this stuff, you're a huge skeptic like I was, I think that book had the biggest impact on my life. No other book has actually changed my day to day. I think, maybe this is just a issue with the way my brain works. Like, I'll read a book and it'll inspire me for a little bit, or it might change some habits, but it kind of reverts back to my mean behaviors, right? And so in terms of favorite books though, Predictably Irrational is probably my favorite book. It's, in short, the thesis of the book is that humans are so irrational to the point where it's become predictable. And you can predict these irrationalities. And if you learn what these irrationalities are, and you learn the trend and the predictabilities within different things that humans do, you can have an edge, whether that's relationships, whether that's trading stocks. There's a good section in there about money in markets, whether it's about starting businesses. I really, really enjoyed what that book said. I'll give you one of my favorite excerpts from it. One of the biggest ones are when it comes to money and anchoring with price. So if you, let's say you're shopping for like a new coffee machine or a new toaster at like Target, and it's like $50, right? And I told you, hey, Kirsch, there's actually a Walmart down the street. Instead of $50, they have it for $20. There's a chance you might consider going there, right? A lot of people would just say, okay, well, it's right down the street. I'll go do that, right? Now let's say you were shopping for a suit, or let's say you were shopping for a car, right? And we could use a more modest example. Let's say you're shopping for a used car that's like $20,000 or $30,000. And I come and tell you, I say, hey, Kirsch, there's another dealership 10 minutes away. They have the same car for $30 cheaper. You're going to be like, I don't give a fuck. Like, it's $30. So it's interesting that we've already, we've defined that in the first example, 10 minutes of our time is worth $30 because we'd be willing to go across the street to the other store to save $30. So why is it not the case in the second example? And it's a really great example of the predictability of anchoring, right? When the purchase is so large, all of a sudden we've lost that sense of value that $30 has. And there's a lot of good parallels there with trading when it comes to your portfolio size growing over time too, right? We become much more careless with smaller numbers, right? To someone trading $500,000, losing 10 grand, 20 grand, you don't really sweat it much. But like if you have, a $50,000 portfolio, $20,000 is huge. And I get it that in that sense, of course, it can be said like, well, that's because it's a percentage of your portfolio rather than the tangible dollar amount. But I think you get what I'm saying. It's just one of many amazing examples in the book.
Yeah, I mean, that is a very solid example because as an educator in the space, I can confirm, and someone who, as a kid, actually spent a lot of time doing maths tutoring. And when I mean a kid, I mean literally as a teen. I just enjoyed teaching maths. It was fun. But some people, most people, not some people, most people struggle to understand percentages and ratios. And therefore, these sorts of decisions, they don't know why they care about one or don't care about the other. And it's why the bigger your portfolio is why risk management is important. Like a 500K portfolio shouldn't care about a 10K loss. Like that shouldn't be a big deal to them, but it should be for someone who's trading a 50K portfolio. And I definitely, AP, definitely don't want to overlook the awesome story you gave at the start there. And I agree with your mother. I am going to 100% double down and agree with your mother that it's not so much. Let me give you a more data-based approach, which might help sway you to the side that mindset is essential. And I mean, probably the most common trait I've found among all the successful people that I've had the pleasure of interacting with, bringing on the podcast, talking with, being mentored by, all interactions I've had with hyper successful people, they all have one, extreme confidence, an ability to lose, and an ability to see the big picture, believe in it, and just their mindset is like tunnel visioned on that big picture. And that is the Think and Grow Rich. And what it does is it creates a compound effect. Every decision you make, if you truly believe that, and that is all you think about, gets filtered through that binary decision. Like, for example, I want to sleep in today. But if my vision is constantly becoming rich and reaching that goal I'm trying to reach, then going through that filter, suddenly I'm a lot less likely to sleep in. Now, does it matter once if I sleep in an extra hour? No, but add that up over years and years versus the person that doesn't, alongside every other decision I make every single day, that's going to have that's an edge that no one can compete with because it's just too powerful.
Absolutely. Yeah. I think the number one advice I would give to someone that they're wondering, how can I make it big? How can I make a lot of money? And I don't think by any means I'm unnecessarily there, especially when I see some of the other guys on Twitter with how much they have. So this is just coming from someone that started with very little and now I'm in a more fortunate place. But the number one piece of advice I'd like to give is to bet on yourself. And I think in a lot of ways that parallels to, that mindset that you're talking about, right? Betting on yourself, I think, is the number one common denominator that I've seen with some of the more successful, more rich, or wealthy, however you want to say it, friends or colleagues that I have. It's the people that they are so certain that they will make it big or they will be successful in a certain venture that they choose to bet on themselves. They choose, and that betting on yourself goes hand in hand with taking some risks. You will not make a lot of money without taking risks. And that is not to say go ape in on Ethereum right now on 10x Lev or whatever, right? It just means you need to be comfortable taking calculated risks, and those risks need to be risks where you are betting on yourself to be the more victorious outcome.
Listen, this is what just happened. I switched off and ended the podcast. And then AP told me, listen, my followers are going to be really, really mad if I don't leak at least some alpha. Those were his words exactly. So this is the extra bit at the end of this podcast. Congratulations. If you listened this far, you're about to get alpha leak from AP. Let's go, AP. What have you got for options trading?
Okay, so yeah, I've got so many people, over the past few months, um, asking me for advice or how I go about trading options. I think that's probably what's of most interest to my following right now. So just kind of talking through what I look for when it comes to trading options. I've got kind of a specific strategy, but in some senses it's systematic because I look for I look for sectors that are really, really hot. But I will never trade the sector leader. So we can use electric vehicles as a great example, right? Before, some people might know NEO now is starting to become a name in the EV space, or like Workhorse or Nikola. Those were kind of making some waves earlier this year. But before that, we saw Tesla really, really have a crazy run up. And what I really love to do when it comes to trading options is two things. Look for the sectors that are really hot, but look for the lags. Look for the laggards in that sector that haven't taken advantage of the notion of, what is it? Floating. They say a rising tide lifts all boats, whatever that saying is.
Yeah.
That's a hugely accurate statement in equities. And then what I do is I'll do some research on, what are the other names in this sector that, maybe like the top 10 largest names behind like the industry leaders. And then I look at the option order flow, and I'm a huge believer that the option markets dictate spot price. One way I think that happens is with Max Payne theory. And I really need to do a thread on this on Twitter. A lot of people think Max Payne is just a term for like what would suck the most based off like, oh, if Bitcoin crashed here, it would be maximum pain. People think that it's like a hypothetical outcome, but maximum pain is actually a very specific scenario where the most amount of money in retail is lost because you look at the calls and the puts. It's the strike price at which the most options are expiring worthless. Inversely, what that means is the market makers that are writing these options, they lose the least amount of money. And so I take a look at and there's a lot of free calculators online. You just type in the ticker and it tells you what the max pain is. So I'll take a look at max pain, and then I'll look at the option order flow. And I'll look at, unusual option activity. So a couple things that might be quote unquote unusual option activity are repeat sweeps or blocks at high volumes. So that's basically when you have a buyer putting in an amount of money that's far above the typical average. And when it sweeps, it basically means they're buying at different contracts, different strike prices. And I also really love when it's above the ask. So they're literally paying more than the ask. It implies a sense of urgency. So you look for those scenarios. Those are the options that I love to buy, because that means I'm tagging along with some big money, and big money is usually not wrong. So looking for options that have some bullish order flow, and combining it with spot assets where the max pain is quite a bit of ways above what the current spot price is. Because there are instances where that happens, where max pain might be 10 or 20% away from spot. That's a really, really great buy right there, because max pain theory states that market makers will try and shift the spot price as close as they can to that max pain level. So it's just so many great levels of confirmation that the max pain, if it plays out, your spot asset will increase by X%. You have the confirmation that there's really large buyers buying specific calls around those levels. I call that a really high probability trade. And then the final piece is I just look at the chart. If the chart doesn't look like shit, I'm buying that option. And this strategy has worked incredibly well for me. One last thing that I love doing, I think it's like the easiest money in the world, is
wait, AP, before you move on to the next strategy, I want to dive in a little bit further into this one, because this is really interesting. So your first filter is to identify a hot industry and look for laggards, right?
Yep.
And then within that, you use this Max Payne theory and like simple calculators that you can find online to identify these zones of Max Payne, and then trade around those with the hypothesis that people will try to push the price towards Max Payne, and then follow whatever big money does by using order flow analysis.
Yes, that's spot on.
Nice, just making sure I understand and maybe give the listeners a little bit of a summary. Then please, let's move on to the next one. This is amazing.
Yeah, and just to clarify on the Max Payne thing, Max Payne is kind of a controversial theory. It's one of those things that it's like, I think it's like mean reversion, where it works until it doesn't. There's some people that love it. There's some people that think it's total BS. But if you think about it from a big picture perspective, it makes a lot of sense that the market makers are the ones writing options. They're going to want to try and mitigate their losses when they write those options as much as possible. So it does make sense that they're going to try and influence price as much as they can towards the point of Max Payne. Max Payne it's like the cherry on top. So I think maybe a better way to go about that order is switching 2 and 3. Where to me, I would say it's more, I tend to look at Max Payne first, but if we're talking about what's more impactful, there will be scenarios where the Max Payne is not at a certain level, and the option order flow is showing something else. And that's because a lot of times we see inside trading happening at those large levels. A really great example, I kind of demonstrated this live for my followers, was with trading Moderna. A couple weeks ago, I think Moderna was trading at like, I don't want to make up numbers, so people have to go back and look at my tweet, but basically I saw a huge like $2 million bet coming for Moderna that it was going to hit $95 by December. And I think at the time maybe it was like $70. Like I said, you'd have to go back on my Twitter to verify, but I told people, hey, I'm buying these options because it's vaccine season. Someone on the inside, I think, or someone that knows someone on the inside, I think there's going to be news coming out about Moderna soon. And literally within a couple days later, Moderna releases the report that their vaccine has 95% efficacy rate. And that's a great example where there was a misalignment between the market maker writing the options and whatever potential insider it was that knew there was news coming out. So that's why it's not a two-factor requirement. It's kind of a cherry on top when Max Payne aligns with option order flow. Right. But it's not a requirement because a lot of times there will be misalignments between the market makers writing the options and people that just know things about the companies. So that's why I think option order flow is such a cool tool.
Fascinating. Then if you'd like to move on to the next example as well, I think you had one more for the listeners.
Did I? I'm trying to think.
Did you not? I thought you had one more before I interrupted.
Oh, I did. You're right. Yes.
Yes.
The last one that I was mentioning, it's been kind of like free money to me lately. So I think Jim Cramer has a lot of influence on the stock market. I truthfully don't know how he hasn't been fined for insider trading or for pump and dumps or anything like that, because what he does is essentially pump and dumps. He'll buy stocks and then he'll go on Mad Money and talk about it. But I look at his interview schedule. I look for companies that they're in earnings season, and a lot of times he'll bring guests on maybe like the day of their earnings or day before their earnings. This is an unproven theory, but back tested, it seems to be pretty accurate that I don't think a CEO of a company is going to waste time going on CNBC the night before earnings if it's not going to be good earnings, right? Because then the board members are going to be mad. They're going to say, hey, your company's missing earnings. Why are you wasting your time on television, right? So I love looking for interviews with companies right around their earnings times.
That's a really solid theory. It just makes perfect sense.
It makes sense, right? And so I'll buy short-term calls. And again, I'll look for the option order flow. I'll look to see if there's any unusual buying activity, because that's really where you see unusual option activities around earnings seasons. Because people share information, you might have a buddy, or they might say, hey, I work at this company, we're going to beat earnings pretty good, So I look for unusual option activities that are short-term calls. And those are the ones I'll buy, like options that are a couple days out from expiry, so they're dirt cheap. They're also known as lottery tickets, because they're dirt cheap options. And like 9 out of 10 times, it works brilliantly. You know, the CEO will go on Mad Money. They'll go and hype the company up. Jim Cramer will hype the company up, be like, oh, these guys are killing it. They've had such a great year. We're excited to see how earnings report comes out. And then the CEO will kind of give some foreshadowing that earnings will be great. And then, of course, after hours, when the segment's over, the stock is pumping super hard. And so like those two strategies are really how I've built the bulk of my wealth this year, options trading. And this is why also I think 2020 has, I mean, like the altcoin run of 2017 hasn't even held a candle to how much I've made in 2020 from trading legacies.
Well, I'm really glad that you can say that. I think every trader who's managed to improve from 2017 till now should have made more money than they did in 2017. Wouldn't you agree?
Yeah, absolutely.
Nice. AP, thank you for that last minute surprise alpha leak. I think our listeners are going to absolutely love it, especially that interview strategy, because that's so easy to apply. And heck, you could try apply that not just on options, but other ways of profiting off that. There's all sorts of creative ways which you can make money off of that. AP, thanks again. This time, second outro. This time I'll try not mess it up first time. Thank you so much for your time. This has been an awesome podcast, and I really appreciate how much you care about your audience, that you were willing to add an extra 10-minute segment simply so you could give them a huge alpha leak. I mean, that's just awesome, man.
Of course. Yeah, it's been great chatting.
Dude, it's been a pleasure to meet you. Thanks again for your time. And listeners, join me again next time for another episode of the Market Meditations podcast. Thank you so much for tuning in to another episode of the Market Meditations podcast. If you enjoyed this episode and you'd like us to continue bringing you fascinating people from across the world, please leave us a review on Apple Podcasts, Spotify, or wherever else you like to listen to these podcasts, and share the episode with a friend. If you have feedback or an idea for a potential guest, reach out to me on Twitter at KarushAK, and do not forget we write a newsletter covering all important topics in crypto and traditional markets. We send it out 3 times a week. The Market Meditations newsletter. You also get early access to these episodes, and you get transcripts and extra notes as well, so make sure to subscribe there as well.